Unemployment has fallen. South Africa's official jobless rate eased to 31.9% in the third quarter, and that's from 33.2% in the previous 3-month period. This puts those without work in the country at 8 million. South Africa's manufacturing output ticked higher in September. Production rose 0.3% year-on-year, marking the first increase in 3 months. The motor vehicles and transport equipment sector led gains with growth of 7.6%, while food and beverages added 1.8%. Those improvements helped offset declines in electrical machinery, wood and basic metals. Premier Group has reported a strong performance at the halfway stage. That's as its mill-bake division was the main driver of growth. Headline earnings per share rose 28%, while operating profit climbed 17%. An interim dividend of 159 cents per share has been declared. The firm, which produces Blue Ribbon bread, says the commissioning of Phase 1 of the Ayrton Mega Bakery project is on track for mid-November, and Phase 2 is expected in February. This will meaningfully enhance efficiencies and economies of scale for Premier. Solid, and that's how Storage has described its trading performance for the 6 months to end September. South Africa's largest self-storage company benefited from continued revenue and occupancy growth during the period, resulting in a 4.5% increase in distributable income per share. Looking ahead, the company has reaffirmed its full-year forecast of growth in distributable income per share of between 5 and 6%. Barloworld expects to report lower annual earnings. That's amid a decline in trading activities at its Russian unit and lower demand across some Southern African markets. Headline earnings per share for the year ended September are forecast to be between 20 and 22% lower. The industrial group will release results on the 17th of November. AngloGold Ashanti's delivered a strong third quarter performance. The gold miners' headline earnings more than doubled to $672 million. Free cash flow hit a record high and surged 141% to $920 million, helped by disciplined cost control and higher gold prices. CEO Alberto Calderon says the results reflect strong margins, flat cash costs in real terms, and continued capital discipline. AngloGold ended the period with net cash of $450 million and reaffirmed its full-year guidance. The Reserve Bank has inked a deal to acquire half of Pay Inc., which is responsible for clearing payments between the country's largest banks. The transaction established Pay Inc. as a national payments utility, as it will now be jointly owned by the SARB and South Africa's commercial banks. Pay Inc., formerly known as BankServe Africa, says the deal marks the beginning of a new chapter in SA's payments modernization journey, and the unique public-private partnership provides the foundation for building a digital payments ecosystem that is more secure, efficient, and inclusive. Further afield, Sony has increased its operating profit forecast for the fiscal year ending March 2026 by 8% to $9.5 billion, driven by a smaller than anticipated U.S. tariff impact and robust performance in its entertainment and semiconductor divisions. Here's more detail in this package report.
Sony raised its operating profit forecast for the year by 8%. The Japanese giant now foresees $9.5 billion in gains for the 12 months ending in March. It cited a smaller than expected impact from US tariffs and showed confidence about the strength of its entertainment and chips businesses. Operating profit in the July to September quarter rose a tenth to $2.8 billion. That after its chips businesses and its music unit, which includes anime, saw higher sales. The conglomerate was once best known for household electronics, but it's become an entertainment powerhouse and bets on the growth of anime. Profits at Sony's games business fell in the second quarter after the company booked impairment losses from the Destiny 2 video game. The firm sold 3.9 million units of its PlayStation 5 during the quarter, in a slight rise from the same period a year earlier. Sony is also a leading manufacturer of image sensors used in smartphones. It said sales of large sensors boosted its chips unit during the quarter. Sony further updated its outlook on the impact of US trade tariffs for the financial year to $324 million. That's down from the more than $450 million projection it made in August. Sony shares closed up 5.5% following the earnings release.
And Vodafone's shareholders are set to receive their first dividend increase in 8 years, thanks to the company's improved earnings outlook, driven by a return to growth in Germany, boosting the European mobile and broadband operators' prospects. Here's more on this.
Vodafone shareholders are due to get their first rise in its dividend in 8 years. It comes after the mobile operator upgraded its earnings outlook on Tuesday, largely thanks to top-line growth in Germany. The firm also said it had made a fast start in bringing together the Vodafone and 3 networks in Britain. Vodafone completed the merger with Hutchison's 3 in May, becoming the country's biggest operator. Shares in the British company are trading at 2.5-year highs and rose in early trade Tuesday. Looking ahead, the company said it expected to deliver the upper end of its guidance ranges for adjusted core earnings for the full year. That's between $13 billion and $13.4 billion. Vodafone's CEO said based on stronger performance, it would introduce a new progressive dividend policy with an expected increase of 2.5% this financial year. It comes after the firm slashed its dividend by 40% in 2019, when the cost of buying 5G spectrum in Europe caused its debt to grow.